Hello there, Maverick traders. This is Rob Reinhold. Here we are, June 12th, and we had a pretty eventful day today. In this session, we're going to be talking about what happened through the day. We're talking about some of the news. We'll take a look at the market and take a look at it as a scoring system of +3 to -3, and then we're going to find some of the best longs, and I've got a short for you as well.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Well, today we got the double whammy of the CPI report in the morning, and then the FOMC met and announced interest rates. Big news in the morning. CPI comes out well below expectations. I mean, everything was just so much better than even the most optimistic people were expecting on this report. The futures jumped up. The markets were up. I saw at the high, the S&P was up about 1.3%. The NASDAQ was up like 1.8%. At one point, the Russell was up 3%. So these were all all-time highs except for the Russell, but pretty much everything at all-time highs. And then the Fed came out, and they weren't as dovish as people thought they might be. They basically come out and said there's going to be one cut this year, and then there's going to be 4 cuts next year. Okay, so maybe there's a little disappointment. We didn't close on our highs. We sold off a bit near the close. Now look, I've been saying all year that I don't think there's going to be any rate cuts. And guess what? It looks like I'm going to be wrong on that. Looks like we are going to get one rate cut. The fact that we've seen other central banks around the world cut rates, and this CPI report is just beautiful in the fact that it gives the Fed the ability to make a rate cut. It's going to be largely symbolic, and I think they have to do it soon because I don't think they want to be seen as being political going into the November elections. So the next meeting is in late June, and then after that it's September. I don't think they dare raise in September or in October. I think they've got a cut in June, but as I've said, that's probably about it. The markets like this news. As I said, we close off of the highs, but take a look at it. The Dow sold off throughout the day, but look, that's a dumb index. Let's take a look at the S&P, the Qs, and the Russell. Those are solid gains. Those are really solid gains. Oil and gold were up more than this. I think oil was up like 2% at one point, gold up about 1.5%. Everything just came off of its highs. If we take a look at the market internals, solid internals, 70% of stocks going up, 58% of stocks above their 50-day moving average. These are solid numbers. They're not like overbought crazy numbers. These are just good, solid numbers. If we take a look at these charts, we had this base here, and then we broke out of this base. And look, sometimes you break out of a base and you get an explosion, and sometimes you get a breakout and a breath. Ooh, it took a lot of energy to break out. Takes a breath. We get a gap up. Look, this candle is not the best candle we could have got today. The fact that we pretty much lost all of the gains from the open, and that the only thing we got was gains from the gap, it wasn't a super strong, crazy buying day. It just wasn't. I could easily see us, just sinking back down into this area, but the next bit of support is going to be 53.70. 53.70 is going to be that next level. We could go all the way back down there and be totally fine technically. There's nothing wrong with that happening whatsoever. If we come over here to the NASDAQ, to the Qs, a little bit better candle and a little bit better breakout. Again, we broke out from this range, and we were able to actually build on those gains. The NASDAQ still looks better. The chip stocks, you would think that the semiconductors would be tired of going up pretty much every day. They look amazing at the moment, and I really had to hold off because my buy watch list was pretty much all semiconductors, and I realized, hey, I need to look at some other stuff here, but just every single chart was just phenomenal. And if we take a look at the heat map, we can see that that's where the action is. That's where the most intense buying is happening right now. It's in the semiconductors. Look at that. That is just pure green in there. Very, very strong. And we got earnings from Broadcom after the bell. I mean, take a look at this chart after the bell. This thing is soaring. Just everything is really strong in the semiconductor sector. So do we have any change at all in our outlook? We don't. We were a +3 going into the day. We're still +3. Everything still looks very, very bullish. So let's take a look at some trades, and you can bet I'm going to look at more bulls than bears. As I said earlier, I had to hold off on not putting too many semiconductors up there. NVIDIA looks good. Again, Qualcomm looks really good. Again, there's so many semiconductors. I had to hold off on just loading this whole thing up with semiconductors. But I'm going to take a look at some of the other trades that I think look good. And this first one here is Neogen. Now, I have never traded Neogen, N-E-O-G. It is in the healthcare sector. But look at these candles. Big expanded range candle off some sort of news. I don't care what it was. And then this is just beautiful. This is a base that somehow has all green candles. Take a look at that. Every day it went sideways. Well, it went sideways, but it gapped down and ran. Gap down, ran. Gap down, ran. Gap down, ran. That's how you get all green candles, is that they would gap it down in the morning and then everyone would rush in to buy it. And this is after it had this huge run. These are extremely strong patterns. And here we got this breakout. Really, you could have bought this breakout yesterday, but this candle is perfectly fine. Now look, this is a biotech. This is a big mover. It was just $13. We're now 35% higher. I think you can go, I don't want to say all the way up to 20. I would like to have a more reasonable target of maybe an 18 or 19. But look, a 16, 18, 16, 19, a 17, 19 bull call spread. Those all look really, really solid to me on NEOG. And the other one that just looks fantastic is Royal Caribbean, RCL. And this thing is just stair-stepping higher. It runs up, it pauses. It takes a run, it pauses. It takes a run, it pauses. This is just simply going higher in a long-term trend. Where is the next target on this one? Well, I think you just simply draw a trend line, and that gets you to 160. Lots of trades you can make here. 155, 160, 157, 160. Again, you can do a lot of different trades out this one on RCL. Looks very, very strong. And I got to say, I was a little bit surprised that I found some really good shorts. Go back to my watch list, and there's some really good shorts on there. I ended up going with this one because this one looks so heavy. I mean, I know that's not a real technical term, but just it's heavy, meaning, you know, it can't even base. This usually is a base. You know, you come down, you have a big sell-off, and then you base. And then you have another big sell-off, and then you base. This is not even that base. This is like a sloping base lower. This just looks heavy to me. I like this trade quite a bit. The 50-55 bear call spread. You're going to have to look at probably the monthlies. So that's going to be next Friday. But 50-55, I think, is a really solid trade. It's right in the middle of that. So that means you're going to get probably 250, which means you have 250 at risk for 250 at gains. I like this one quite a bit here on the short side. Let's talk about tomorrow. I think these markets look like they're tired. I'm not saying I think they're ready for a pullback. There's difference. There's a difference of, okay, we're ready for a pullback. I think we have a pullback coming. I don't see a pullback coming. But I just feel like the market is a little tired here. That means consolidation. We just had some breakouts, and there wasn't a whole lot behind them. So that just tells me we're likely to consolidate here. Now look, we have some sectors that are just absolutely on fire, and they might just keep pushing us up. This semiconductor sector looks really good for another leg higher, and if that happens, it's just going to pull everything up along with it. So you definitely do not want to be net bearish here. We want to be net bullish, but we also probably have to think about, okay, are we going to have another 10% run from here? No, we'll probably grind higher. Tomorrow we have the PPI. I don't think that matters too much. And we got Adobe earnings after the bell tomorrow. That is it for me. Thank you for joining me. Everyone take care. Goodbye, everyone.